Hello everybody, I'm Rishad Salamat. This is Counting the Cost at Al Jazeera, your weekly look at the world of business and economics. This week, from Europe to Asia, countries are looking for alternatives to Middle Eastern oil and gas supplies. So what options do they have if shipping through the Strait of Hormuz remains blocked? Is Russia the only winner of the conflict between the US, Israel and Iran? The president of the EU Council says it is, but who stands to gain and who stands to lose if this war continues? The war in the Middle East is exposing how dependent the world remains on a handful of strategic choke points. The Strait of Hormuz, a narrow waterway in the Gulf, is effectively closed, and the longer this goes on, the faster the global energy map could be reshaped. From Europe to Asia, countries are facing mounting supply risks and the threat of an inflation shock. If the conflict between the US, Israel and Iran drags on, alternatives will be hard to find. But not everyone loses from an oil and gas crisis. Russia is shaping up to be a major beneficiary, with soaring prices filling Moscow's coffers despite Western sanctions. But who else wins and who loses? We're going to be discussing this with our guests shortly. First, though, Fintan Monaghan with this report.
The Iran war has thrown global energy flows into turmoil. 20% of the world's oil and natural gas once flowed through the Strait of Hormuz. Its effective closure means many nations are scrambling for alternatives. One country is well positioned to profit from the panic.
In the current environment, competition among buyers for energy supplies and for stable, predictable oil and gas supplies is intensifying. In this regard, I certainly cannot help but mention stability is precisely what Russian energy companies have always been known for.
Since Russia launched its invasion of Ukraine in 2022, it's been economically isolated by Western powers. Russian oil and gas exports, a lifeline to the economy and fuel for the war effort, have been placed under sanctions. Its so-called shadow fleet of tanker ships, used to evade restrictions, has been subject to a crackdown. Several vessels have been seized in recent months. But the Iran conflict is putting pressure on many economies to ease sanctions on Russia. Europe imports nearly all its fossil fuels and has shifted away from Russia since 2022. But now it's once again facing soaring energy prices due to the Iran war. Russia has offered to supply the EU once again in exchange for what it called long-term sustainable cooperation free from political pressures, which would likely mean dropping sanctions. But top EU leaders have warned that Russia could emerge as the only winner from the Iran war. So for now, the bloc isn't making any deals with Moscow.
It's important that we do not now ease the pressure on Russia and do not help Russia to fill its war chest using this situation of elevated oil and gas prices right now. So that's why it's important that we stay the course with our sanctions.
India, however, is willing to do business. Under pressure from Washington, Delhi had been shifting away from Russian oil. It was looking to the Gulf as an alternative when it was blindsided by the current crisis. The US has thrown India a lifeline, a 30-day sanctions waiver on Russian oil purchases. It's an offer it says it may be willing to extend to other partners to ease the pressure. Elsewhere, China was among the most well-prepared for the current crisis. It's built up LNG and oil stockpiles to keep the country going for around 4 months, enough to insulate consumers from the shock of price rises for now. It's been buying record amounts of oil and LNG from Russia in recent years, more than 20% of fossil fuel imports. And this may increase even further. New gas pipelines are already in the works, a project that may be accelerated due to the crisis. There's no way to know how long the Iran war will last. It could be weeks or it could be months. But the longer it goes, the more likely it is to benefit Russia. Fintan Monaghan, Al Jazeera, for Counting the Cost.
So besides Russia, who are the winners and losers from this crisis? Oil exporters far from the Gulf will likely come out ahead. Countries like Brazil, Australia and Guyana, they aren't tied to Iran, and their export routes are largely unaffected by trouble in the Strait of Hormuz. Oil companies in Canada and the United States may also benefit, but domestic consumers won't be liking higher prices. And with the midterm election coming up in the US, there may be political consequences if prices go up. East Asian economies, China, South Korea and Japan, are highly reliant on Gulf oil and gas. They all have large reserves that will last quite a few months. But if the war drags on, they could face serious economic consequences. And then there are the countries in the Gulf itself. Their economies rely on fossil fuel exports, but many of those routes are now cut off. Qatar and Kuwait have already shut down production as storage tanks fill up with fuel that has nowhere to go. So let's take this on with our panellists from Paris. We're joined by Neil Atkinson. He's a visiting fellow at the National Center for Energy Analytics in Washington and the former head of the Oil Industry and Markets Division at the International Energy Agency. In Singapore, we're joined by Moi Yu. She is a senior crude oil analyst at Kepler. And in Oxford, we're joined by Adi Imsirovic. He's a lecturer in energy studies at Oxford University and the former global head of oil at Gazprom Marketing and Trading. A warm welcome to you all. So let's start off with you, Moi Yu. And just a basic question here. Who wins, who loses, in terms of countries, at least, to begin with?
Right. I think you correctly pointed out that the Russian is an obvious benefiter. Right now, they see their oil are happily taken by Indian buyers. I heard over the past week or two, they snapped more than 30 million barrels of crude. And this morning, I talked to the Chinese buyer. I asked, where's the prices? And they respond by saying, what prices? We cannot find any barrels being sold in the market. So that means Russian oil, because it's prompt delivery, is extremely welcomed by the market. And the oil prices now increased by at least 15, even $20 compared to 2 weeks ago. So Russian definitely is benefiter. Then other oil producers like Brazilian, Canadians, yes, they also see their prices going up, and the Asian buyers, they are keen to take the barrels. But then the problem is, even if they buy it now, the oil will not arrive until 2 months later. So that leads to who is the biggest loser. Then obviously all the Asian countries, especially those who heavily rely on the Middle Eastern crude but has relatively low inventories, such as the southeastern countries like Thailand and Vietnam. Now South Korea and Japan, they plan to release the oil stock, but that's not enough if the war drags for more than a month. Even for China, now they hold 1.3 billion barrels of onshore crude inventories. But still, they still need something to be able to fill in the gap immediately. And right now, they don't really have a candidate.
Adi, the Russian finance minister was really relying on oil to average out at about $59 a barrel for Ural crude. Oil prices nearly doubled that. It must be a massive boon for Moscow.
Well, absolutely. Short term, this is a massive relief, fiscal relief for the Russian government, because obviously the economy is being highly wounded by the war. The fiscal deficit is large and the economy is not doing very well. So this is a shot in the arm for the Russian economy. But I would just like to take a little step back, if you like, step forward a little bit. I actually don't think this war is going to benefit anyone. It's not a very good war for even the oil-producing countries outside the region, because these high prices, and if I may just add to what my colleague just said, there is a little bit of oil trickling out of the Gulf. Today, I saw an offer in so-called pricing window for an Oman cargo. The offer was $167 a barrel. So it just gives you an idea where the real physical oil price is. But at these prices, energy security has become a number one issue, and it has been for quite some time. And I worry for the oil industry in a way that this will just hasten a move away towards renewables that are endogenous very often and not subject to such shocks.
Yeah, I'm going to come to that. But Neil, when you look at it and you frame it in another way here, I mean, if oil prices remain elevated and if the Hungarians have it, they want sanctions removed on Russia, would they have no choice but to remove sanctions at some stage?
Oh, I think it's inconceivable that the European Union and other countries can remove sanctions on Russia. I just cannot see how that, morally, let alone anything else, is really likely to happen. Adi's absolutely right that Russia, of course, has gained an enormous fiscal benefit from the crisis since the hostilities started, and that's an unfortunate fact of life. The only way in which we can prevent any pressure on Russia by parties to release sanctions on Russia is to end the war in the Middle East. And that is the simple solution to all of this, for hostilities to end. Nobody wins from this. And the reason that nobody wins is that oil is used in every single country in the world, various products, various sectors of which oil is used, and oil is going to cost more. And Adi's remark just then about, I think he said the Murban crude being offered $167 a barrel, that is a straw in the wind as to where we might be heading soon, unless there is some kind of easing of the hostilities.
Yeah, Adi, but if you look further down the line and you look at some of the futures contracts for really 12 months or thereabouts, we're looking at 60, 70 bucks a barrel. So they're pricing in a short conflict in essence here. But Adi, I just want to get to Kirill Dmitriev. He is a Kremlin aide. He said in a series of posts on X that the oil shock tsunami is just beginning. He was criticizing Europe's decision to wean itself away from Russian oil, saying it was a strategic mistake, was it?
This is a question for me. Well, just the December Brent is trading at $77 a barrel. It is creeping up. Only on Monday, when I spoke to one of your colleagues, we were below $70 a barrel. So it is creeping up. The problem is for the whole market at the moment, and I've spoken to my colleagues, traders, what traders are looking for is some sort of meaningful resolution to this conflict. And what they're not finding right now is light at the end of the tunnel, that we don't have objectives, clearly stated objectives, so we can't really compute what is happening and what will lead to those objectives to end the war. The objectives seem to be shifting all the time, and this, as a result, this war keeps being prolonged and prolonged and prolonged. So where we are going right now is very hard to tell.
Well, we look at this, and then you look at it from an Asian perspective, that maybe they're thinking now, many of the countries, that they need to wean themselves off Middle Eastern oil and gas. Now, is this likely to redraw the shape of the way that oil supply maps are actually drawn?
I think it's very difficult to do that because a lot of most of the Asian oil refining system, they are designed to process medium sour crude, mostly from the Middle East. And because of the close proximity and also the freight rates, it's natural choice for them to buy the Middle Eastern crude. And you also need to adjust your yield if you change your crude slate. And then, okay, some countries might want to expand their supply like a shopping list. But the problem is where to find those alternatives crude from the Atlantic basins. Then the next question would be, will the producer there have the capacity to boost the production at large scale? And then I think it's generally easy to lower the Middle Eastern crude portion, let's say from 50% to 45% or 40%, but in the case of Japan, Middle Eastern crude accounts for about 93% of its total imports. It's very difficult for them to lower it down to below 70, let's say. So I think in the short term, the Asian countries, they will continue to heavily rely on the Middle Eastern crude.
Yeah, absolutely. And Adi, you know, when you look at this and you see what's been going on, of course, with the Ukraine conflict, a lot of Moscow's energy infrastructure has been partially, or should I say, been affected, let's put it that way, diplomatic terms here. It'll be tough for them to meet demand too.
Absolutely. You're absolutely right. I think the very important point here is that while Russia is benefiting very much in the short run, you have to understand the Russian oil industry is being under sanctions, lacking technology. Most of the investment has been focused on just trying to maintain the current production and the current very, very old refineries and pipeline systems. And it's just barely managing to keep that under the war conditions. So any benefit longer term by additional expansion of this production at higher prices is totally out of the question. So long-term benefits to Russia are zero.
Well, please hold those thoughts, because the question everybody's asking, will the US benefit from the oil crisis sparked by the war on Iran? Before we go into this, let's have a look at who actually profits from an energy crisis. In the third quarter of 2022, ExxonMobil and Chevron reported more than $30 billion in profits between them. A new study based on Russia's invasion of Ukraine found that the wealthiest 1% of Americans reaped about half of the profits because they normally own most of the shares in any industry. But inflation also went up, driven in part by oil and gas prices, meaning everyone faced higher bills. Not everyone, though, saw an equal hit to their household. The UK, for one, imposed a windfall tax on the excess profits of fossil fuel companies and used that money to help households with rising energy costs. Had the US done the same, the move would have sent $1,715 to every American household. Oil prices would have to move higher and stay high for a similar dynamic to play out in 2026. So Neil, give us a sense of how much the oil companies can benefit here, because refining margins are likely to remain stable, or are they?
Well, for the refiners, crude oil is going to cost an awful lot more. If you're an integrated company, obviously you make more money if you're a producer, and then obviously you pass that down through the value chain, and then you will make money from the products that you sell. This whole issue of winners and losers. Yes, the oil companies will make windfall profits. The producers will make windfall profits in the short term. There's no question of that. But ultimately, this is massively detrimental to their customers and the retail customers, and this is not good.
And Moyo, so as Neil was mentioning there, I mean, we're talking about the integrated oil companies, the ones with a decent downstream and upstream and good interactions between that. That's the key here. That's the sweet spot, I suppose.
Yes, but then I guess it really depends on which countries you are focusing on. For instance, like Indian refiners right now, they secure, I wouldn't say enough feedstock, but quite a chunky of Russian crude. So now they can maintain their run rates and continue to export and make the profit of the current high product prices. But then in a lot of Asian countries, like the Asian Pacific, Eastern Asian country, for instance, like China, Beijing already told the refiners to suspend product export. That means they are unable to pass the high crude prices to these overseas product buyers. They can only sell the fuel domestically, and under the current pricing mechanism, they obviously can't pass all the cost. So that means like their profit margins will likely to be narrowed. That will ultimately lead to some run rates cuts at some refineries. And I think a similar situation goes to, let's say, South Korea, Thailand, and Japan. All the countries, because they don't know how long this war will last, so they decided to prioritize their domestic fuel supplies. That means like the profitability might be a secondary thought.
Neil, I want to get back to you and just say, we've got no swing producer right now, for the moment anyway. Could those companies which have big fracking arms to them be sort of taking up some of the slack, if it were?
Well, I think it's highly unlikely that frackers, particularly, of course, in the United States, where most of the fracking activity is, are going to change their 2026 business investment plans on the basis of disruption caused by a geopolitical event. We just do not know how long this will last. And if, for the sake of argument, peace were to be restored in the Middle East relatively quickly, then the underlying oil market fundamentals, after a relatively short time, would reassert themselves and oil prices would slide back. So I think it's highly unlikely we're going to see a sudden outburst of fresh activity amongst the fracking community.
Adi, how do you view it?
Yeah, I 100% agree with Neil. I would just add one more point, which is kind of interesting. What fracking community, they usually hedge their production, not all of it necessarily. So this must be a bonanza for them to hedge their forward production. So that might be another reason that you mentioned about back end of the curve being low and now in 70s, high 70s, because all these frackers are probably selling forward their production and making sure that they remain profitable for the rest of their investments cycle.
Yeah, and let's just move away and have a look at one other aspect of all this. And it's something which East Asia in particular, of course, is seeing this transformation of the move towards EVs, electric vehicles. Could this be an accelerative here as well, and also the impetus for alternatives?
Right. I think the high EV penetration rates certainly give the Chinese consumer a slightly better position than compared to those countries still heavily rely on gasoline or gas oil. But again, really, I have to address, like, depends on how long this war continues, because right now the prime focus remains on the crude oil, but maybe 2-3 weeks later, they started to feel the price hike on their retail gasoline and diesel prices. That might start to feel the tight supply of the transportation fuel. Maybe that's the time they started to realize, okay, maybe it's time to switch to EV.
Yeah, I mean, it's not so easy just putting the taps back on. I mean, it's easy to turn them off, but it's highly more difficult to turn them back on. Isn't that the case, Neil?
Well, if you're talking about the Middle East production, well, if they have phased down and cut back, that's a lot easier to return to normal levels of production than if they just shut everything off. So, again, it's a matter of timing. How long will the crisis persist? And, if they do eventually have to reduce production to very, very low levels, then yes, it will take more time to come back. But as far as EV penetration is concerned, yes, of course, we've seen big sales growth of EVs. Obviously, China is the standout, but in the United States and in Europe and elsewhere, yes, the pace of growth has picked up, no question of that. But I think it's unlikely there'll be a massive spurt to EV sales in the short term, simply because mass market EVs, certainly in Europe and elsewhere, at the moment, they don't exist. It's still basically richer consumers. So yes, there may well be a pickup in EV sales, and perhaps longer term, people will look to energy security as a reason to switch to an EV. But well, again, everything comes back to the duration of the current war. If it ends relatively soon, then I think we go back to what passes for normal relatively quickly.
I'm going to put all this question to you. It's a bit of an unfair one, actually, but Adi, I'm going to throw it to you. What are the unintended consequences of this conflict?
Right. That is an interesting question. I think that the key problem with this war that is going to cause for the rest of the world, first of all, is going to be a massive impact on the oil industry producers and consumers. Let me just throw, to link up to my previous colleagues, what they said. I think a very important point that should be said, and I've been arguing this in my one of my books that came out 3 years ago. The EVs, totally agree with Neil, in terms of total volume of sales. I don't think it's going to be a major impact. What it does is psychological impact, that if you rely on gasoline or diesel prices, okay, and you drive every day as a taxi driver and so on, you now have an option. And psychologically, the impact is going to make the elasticities, price elasticity of demand higher. So I don't want to get too technical about it, but it's going to make definitely a big impact. The second thing is this uncertainty. And I was trading for 35 years. There's nothing worse in the market than uncertainty. People very often say that traders love volatility. They love volatility, but it has to have some logic, some predictability. Unpredictable volatility is bad for everyone. People don't invest. People reduce their buying, and all the energy is spent on trying to guess what Donald Trump is going to tweet next. And that whole impact on the economy is very, very negative. So as I said early on, this episode is going to certainly have a big impact
Yeah.
on the world economy, one way or the other.
Very quickly to you, the same question, unintended consequences in Moye.
Well, I wouldn't call it unprecedented, but well, just standing from the Asian perspective, I think a lot of people were eyeing on China to do something to persuade Iran to reopen the Strait of Hormuz. But until now, nothing really happened, and the Chinese-related vessels still strangled within the Persian Gulf. So I'm not a geopolitical expert, but it was a thought, from geopolitically, yeah.
Neil, to you, the same one.
Well, the final point I'd make probably is that what appears to be the case is that Iran's resilience and its effectiveness has been underestimated by Israel and the United States. I think any thought that Iran might be a pushover, if anybody really did think that, I think they've been disillusioned. And Iran is turning out to be more resilient and capable of causing more damage than the protagonists originally thought. And the consequences for that arising from the closure of the Strait of Hormuz are very, very bad for the global economy.
Neil Atkinson, Mayuju, and Adi Imsirovic, thank you very much for joining us.
Thank you.
Thank you.
And that is our show for this week. Get in touch with us on X. I am at Richard TV, and do use the hashtag AJCTC when you do, or drop us an email. countingthecost@aljazeera.net is our address. Now, there's much more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. Well, that is it for this edition of Counting the Cost. I'm Rashad Salamat from the whole team in Doha. Thanks for joining us. The news continues on Al Jazeera Next.